Good morning, Facebook. Hope you are well. We are going to do a little market commentary, and it's going to be the last one of this year. We did our last trading room session with our Total Trader members last night. We had an in-depth look at a couple of people's strategies because a lot of our guys have been reviewing their trades for the year, and they've been going through and looking at their data and going through a lot of the trades that they're looking to optimize for next year. So looking at ways that they could improve what they have been currently doing. So we had a really good session on that. We had one of our traders, Narain, she's looking at just simply changing the entry of one of the, and what she was doing was she was looking not only at the entry but three possible trade management scenarios. So still looking at the same overall strategy and against the trend strategy in the same market conditions using the same analysis to determine her levels, but just adjusting the type of entry that she would use and the type of trade management. So really working very clearly on two of our four pillars that we teach at TSC, working on the strategy criteria, tier one, and then risk and trade management, which is tier two. And you can see this is some of the data that she has been working on. So we spent a lot of time going through that. But we also came up, well, I went through 13 insights. I'm going to touch on a couple of those before we finish today. 13 insights from the year, relating to the year, relating to trading, and a couple of things that you can take forward going into next year. But before we do that, let's go and have a little look at the main indices, see where we are, see what's been happening. It feels quite repetitive at the moment. You can see here's the daily chart of the S&P. You can see we've been very consolidatory for most of December. If I pull the Dow Jones up, so you can see the daily chart, similar scenario. In fact, the Dow even more consolidatory. So again, hovering just above these all-time highs. So if I go back to the S&P and show you the S&P, we'll go up to the weekly chart. You can see it there. They're the previous highs there on the S&P. Here is the Dow on the other side as well. Just bear with me 2 seconds, guys. Just bear with me 2 seconds. And I'm back, guys. Can you? Hope you can hear me. Sorry about that. A little interruption. Postman delivering some bits and bobs. Right, where were we? So yeah, the Dow. Here's the weekly chart. You can see hovering around those previous highs. If I look at the S&P, same idea. So as yet, these major indices, and if I just pull the Nasdaq in for context, not really doing a lot, just hovering around these highs. So again, for me, if we go in any of these markets and go higher and put in a clear new high, there's no reason the markets couldn't go higher going into 2021. But at the moment, as you can see, things are very quiet. So not a lot to report there. If we have a little look at oil, oil had a couple of downward days this week, big run up, then a couple of downward days here, and as you can see here, we're sitting very clearly on the weekly 21, a new high here. So this could offer some of our swing traders a long entry tonight. You can see that there, so that could offer a nice long entry there. Copper's doing a similar thing. Copper's got ahead of its previous all-time highs. There's clean air to the upside, to where we would consider another trade, another reversal trade, I should say. So there, what you've got is the pullback to the 21. So there could be some potential long opportunities there. So copper and oil offering us potential long opportunities. If we go and have a little look at gold and silver, you can see the daily chart here on gold, really not doing a lot. This slight short-term downward trend, the lower highs, the lower lows. Obviously, we had here the bounce off the weekly 50. You can see that there. So the bounce off the weekly 50. But at the moment, if we look at it from the context of the weekly chart, look, we've gone lower, 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 lower. So lower highs, lower lows. Hit that weekly 50. At the moment, for me to have any sort of short to medium term bullish bullish stance on gold, I would need to see these highs taken out. So at the moment, we're stuck in between that weekly 50 and that weekly 21. So again, this area here little bit of no man's land. I'd want to see these lows broken, and then I would look for further downside to here or here. Or if these highs are broken, I'd look to here. But if we get above that, then I would be more inclined for a retest up there. Right, so not a huge amount happening on the major indices or much happening on gold. We'll just have a quick look at silver. So you can see silver very consolidatory. If you go down to the daily, you can see we did get above those previous highs of November. You'll probably see this better on the daily. So we did get above those previous highs. And again, silver could be, if we keep pushing up, on for a retest of the August highs around the $30 mark here. But again, still very sideways in a little bit of no man's land there. So comparing that to oil and copper, much more of an upward trend going on those two. If we go and have a little look at euro, so euro, similar thing here. Euro still showing higher highs here. You can see we broke out of that sideways move that we were in for a period of time here. Came up, got the new high earlier in the month, another new high here. Again, if we take these highs out, I would be looking for more upside. Our next area of resistance is the 2018 high, so around the 1.25 mark. So there could be some opportunities to get into euro on the lower time frames, especially if we break these previous highs, and then there's a run up to that 125 area just here. Now the pound, we saw the pound move up and retest 2019 highs, dipped higher. A lot of volatility on the pound with obviously everything that's going on at the moment. So you can see there, look, bigger ranges, lots of indecision on those days. So yeah, a lot of indecision on the pound. For me, really, until we get a clear decision on a deal or no deal, it feels like it's been going on forever. We could see more volatility. We could see volatility after that. But certainly on a technical basis, for me, I would need to see price get below these two recent lows. You can see this interim trend line here get clearly below these lows and move will sort of pull back and then move down again, and then I would be inclined for more downside, or we'd need to get a decent high here. But with everything that's going on with the pound at the moment, I'd be a bit cautious around that. We do have some other possible trades that we are looking at here. So I've mentioned euro. So euro is in a situation where it's offering us some momentum trades up to this level, and then some possible reversal trades up here. So there's still this clean air area just here. 125 is that level. So I would be looking for further upside. If we break those highs, I'd be using lower time frames to get up to this level. Or if we get up to this resistance, then I would be looking for reversals. Price wouldn't have to reverse all the way down. I got asked this in the week. Somebody said, when you look for reversals, do you look for price to make big moves in the opposite direction to the trend? And the answer is no. In relative terms, often the reversal can be done and dusted by here. Okay, that doesn't mean that we trade pullbacks when the trend is moving up. So we don't trade these moves here, but when price reaches levels, that's when we look to trade against the trend, and that is where we get the high probability. Some of our reversal strategies have a 60 to 65% win-loss ratio, not because we're not just trading against the trend, we're only trading against the trend when we reach key levels. In fact, the common theme, whether it was Narain that I was talking about a second ago, or whether it is Matt, or whether it is me, or any of the guys within our room that have different against the trend strategies, the common theme is that we'll only be trading those off support and resistances. So yeah, that's euro. So euro's giving us possible couple of opportunities there. We also have, as I've said, copper with a possible long trade, which could be tonight. For some of the guys, they'll already be in on the hit of the 21 moving average, and also on top of that, oil as well. So both of those offering us some potential upside. So I'm going to call it a day there on the analysis. And as I said, this is the last one of the year, but a couple of insights that came out from last night. I had 13. I'm not going to go through all of those, but there was a couple that I really want to hit home here, and I'm going to do some other videos on this. I'll probably do some in the new year on this. But one of the ones that I really wanted to make a point about was recency bias. So recency bias is something that affects all traders. Now, the key thing here is to acknowledge recency bias. If you don't know what recency bias is, It's essentially the human tendency to be affected by the results or the things that have happened to you more recently. Now, when it comes to trading, that's obviously relative to the current results. So when you're trading as a swing trader, one of the things that you have to be able to do is you have to be able to act short term. There are things that you have to do on a daily basis, sometimes even on an hourly basis to place your trades. So the things you have to do short term. But what's really important is you have to have a long term perspective. So what's interesting is this year where we've had not our best year for swing trading results at all, we're probably sitting at around the 50 to 55% return mark. If you look at all 6 of our swing strategies, on my swing strategies, I'm sitting currently at 31. And on my position-based strategies, I'm sitting at 33. So from a swing trading point of view, I haven't hit the numbers from an average point of view that I would normally want. I will be looking for 50% return as an average. But the year previous to this, I was up in the, I think it was 74% the previous year. So from an average point of view, just over those 2 years, I'm fine. But what we had in the second half of the year is on one of our 6 swing strategies, we had a losing period. So on our IR240 strategy, we hit a bit of a losing period. So for somebody that was only trading one strategy, that would have maybe hurt more than most of our swing traders who are trading not necessarily all 6, but a combination of 6. So either 2, 3, or 4. We do have a couple of our swing traders that actually trade 5 of our 6 swing strategies. So it's really important to understand that for me, I still had a good year, and as a result of one of the swing strategies, that offset against those losses. But the challenge that a lot of new traders will face is when they hit that losing period, because it's coming, whether it's coming in the first 2 months, first 2 years, it doesn't happen for 3 years, you will hit a losing period. And that is the point where you have to be aware of your recency bias, and are you being affected by the fact that you've hit a losing month or a losing quarter. So it's really, really important that number one, you're aware of your recency bias and how that's affecting you. But number two, that you have the data and you have all of your trades recorded. You have the current data of your live trades. You have your back testing data. So you're able to cross-reference the current period, whether it is a losing period that's affecting you, making you a little bit unsure, or even when it's a winning period and you're starting to find yourself getting a little bit cocky and a little bit addicted to those winning trades. What you can do is reference those results and look at your previous trades, be it live trades, back testing, or a combination of the two. And what that will do is it will give you the perspective. So one of the big things I think for this year, as a rule anyway, but very much so with trading, is you've got to make sure that you've got the data and you've got the mindset tools in place to give yourself that level of perspective. So by giving yourself that level of perspective, you're able to put your winning runs and your losing runs into context. So you keep what we call your emotional pendulum in balance. So you're not swinging too far into the tendencies of fear or the tendencies of greed. Yes, you will have that. It's natural to feel fear. It's natural to feel greed. It's natural to have positive and negative emotions when you're trading. But you swing the pendulum stays close as possible to the center. All right. So that was the big insight to take. Be wary of that recency bias. Make sure you're aware of that, and you also have the data. So that's me done now. I will be back in touch early in the new year. I'm going to have a little bit of a break. We're currently in tier 2, so we might be heading out and heading off for a couple of days. But if not, and we have to stay at home, all good. I hope whatever you get up to, you have a wonderful Christmas and a very prosperous new year. We're looking forward to coming back next year. We've got a whole host of new things that we're bringing in. We're adding more training sessions to or more live sessions to our Total Trader program. We're going to have free webinars coming up. Our January Kickstart is full, but we're already seeing people book up for the March. So if that's something that you're interested in, drop us a message, drop us a DM, and we can help you. And if there's anything that you need help with for your trading, message us, get in touch with us, and we'll do whatever we can to help. Have a wonderful Christmas and a very prosperous new year to all of you. All the very best. I'll catch up with you soon.